Welcome, everyone, to another interview with one of our fun traders. Today, we are hosting Martins, who have been actually requesting payouts for funding pips for a couple of months now. Welcome, Martins. How are you today?
I'm good. Thank you. How are you?
I'm good, thank you very much. So I don't want to take the pressure off and get dive right into it, your trading journey. But before that, please introduce yourself a little bit, like where are you from, how old are you, so that like the audience can know you, and then we'll take it from there.
Well, as you may know now, my name is Martin. I'm originally from Latvia, so it's the Baltic countries, and I've been living in Ireland since 2006. I'm 30 years old as well, and I started trading about 2020, 2019.
So right before COVID.
Yeah, just before the COVID, I came across like crypto, on a higher level because I heard about it before, but then I started to research and stuff like that. And around 2020, during the COVID, I started learning full time, like spending lots of hours on the charts and researching how does this operate, stuff like that. Not just the charts itself, but actually what's behind the chart, how things work in the markets, who's driving the market, stuff like that.
Amazing, amazing. I think a lot of traders started out with crypto, especially during COVID, because there was this hype, there was this Ethereum, Bitcoin hype, and it was going up and down and up and down, but mostly up. So people were quite interested in it. So I definitely
Oh yeah,
remember that time because that's also how I got into trading.
oh yeah,
It was
cool.
wild times, wild times. So how did this whole journey was like for you in the beginning? So you started with crypto, and how did it go from there? And how did it evolve to what you're doing today?
Well, I'll explain, I think, an example which opened my mind that this could be potentially high income skill set for me in the future. What happened was I was working a factory job, so medical devices, stuff like that. And the Bitcoin was trading around 9 to 11,000 range, and I had, put in about 1,500 in euros, and I had no leverage trade, just the spot trade. So you only make money once it goes up.
Yeah.
So there was a few times where I finished work around, midnight, and I see like 200, 300 euros floating profit, and I'm like, well, this is like almost week salary, because like if you make 400 or 500 euro a week, and then here, 1 day, 2 days, the price goes up, you make 300, 400 euro. It's pretty good,
Exactly.
and it kind of like showed me what's possible, and
Definitely. I totally get that. So you started with spot trading, is it what it's called? Right? Because I
yeah,
also
yeah,
used to do that.
because now the crypto has leverage. You can 50x,
Oh, yeah.
20x, and then back in the day there was only like a spot trade, so you can't short it. You can only kind of make money while it's going up. So that was where the spot trades I would do. But with a small amount of capital, you can't really make much money, not
Exactly.
consistently, stuff like that.
Exactly. I remember there was also a lot of opportunities in terms of since it was the bull season, right before COVID, it was going up, it was consolidating, and after COVID, for a while, it went quite up and then down, especially in like April and May and March. I remember those times. But also there was a lot of opportunity in terms of you buy something, you forget it, and then you open your exchange account for a few months later, and then you see a lot of profits that you don't even know about. Uh,
Right.
those were good times, but now that the focus is on like trading the forex market or like indices or whatever, right? And all these seemed like a in a distant future, like distant past for me. But that's just me. And how did it change for you? Are you still trading crypto or like investing in crypto? What are you trading right now? Which market?
Well, I think I specialize in Forex, and basically what I trade is euro dollar, pound dollar, and I do analysis on daily basis on dollar index. So I only focus mainly on those three. And crypto, I keep an eye on it because the prices are gone very high up. You know, it's hard to hold the trade in crypto with the current prices if you enter now for gains because there is potential for pullbacks as well. And
Exactly.
especially with the halving which happened recently, the prices already broke all-time high on Bitcoin, for example. Some altcoins they pumped crazy as well. And the halving happened, the price sold off a little bit. And usually what happens is after the halving happens, the price is kind of correcting and then there is the main push which can take couple months, 4 or 5 months maybe. So I'm sort of looking at it now, just to keep an eye on. I have certain price levels marked out, and if they are met and I have opportunity for shorts, I probably would short, but that would be maybe something for end of the year or even next year. Because just to quickly mention, what happened was when the Bitcoin first time went to like 66, 67 level, I had intuition like to short everything I have, and I didn't, and it just went to 15.
Totally get it.
Yeah.
But still, it sounds like you still have a plan to invest in crypto in a specific time. Like there's some specific criteria that you're looking for. I love that. It's nice to have a plan. Like because for me,
Oh yeah, of
right now
course.
I'm not investing in crypto at all. Like zero, zero, zero. Maybe if the price action looks so good, I might trade Bitcoin or something. But that's just a little possibility for me after I discovered Forex, of course. But before that,
Mm.
I was all in crypto, like love it, love it, love it. But I think like it's just a phase of life, like
Yeah.
how with some things people it's just a phase. Like for me, crypto was maybe just a phase, but I still thankful for it because it is exactly what got me into full-time trading and I love it. So what about you? Are you a full-time trader now? And how is your routine day? Like what do you do?
Oh yeah. Well, so since COVID, technically, I've been full-time studying trading, fundamentals, technicals, all sorts of stuff, liquidities, interbank stuff. So I went deep into it, at the right time. So now I have the knowledge, but in terms of uh, in terms of the daily routine, for example, so every day I'm up at 7 in the morning, 7 a.m. I have my coffee, clear my mind, go in the garden, breathe some fresh air, calm the thoughts. Um, Usually I prepare my charts and analysis, around 10, 11 p.m. in the evening time because that's when the spread hours are over. So the price is a bit more clear about what might happen overnight or where the price could end up in the morning, which usually like 70% of the time plays out. Then what I mainly focus on is like the Asia to London rollover, which is the Frankfurt, and then sometimes London. That's basically where I enter my most profitable trades. And then the New York is not really my friend because that's where the losses occur. Because I see lots of big moves, but at the same time, it's combined. The big moves are combined with the news, big
Yeah,
fundamental events, and that's another thing. So now, since last week, I made a strict routine, which is trading only London. 1 to 2 trades, 1 to 2% risk, strictly that, nothing else.
I
Because
love that.
yeah, I did go through, some tough period, and I had to how to say it, reevaluate my,
Reevaluate. Totally get it.
yeah,
Don't worry.
yeah. So I had to look at things, what's causing my profits to reduce, what's causing me to blow accounts, and why is my mind, like not so focused anymore because over trading, how to reduce it, how to balance out, because I think personally one session, two pairs, 1 to 2%, I think it's more than enough.
I
You
love
win, you
that.
lose. That's it. You know?
But this comes with over time, right? You
Yeah.
trade for a while. Of course, we all do back testing, right? But trading in the real market has its own perks because you get to see when exactly your strategy works. And then if you can take action upon it, like, okay, my strategy works mostly during London and during New York Open, I usually lose some trades.
Yeah.
So it's nice on the deciding process. You
Oh,
get
yeah.
to evaluate your decisions and like set some rules, set some grounds, and then like take action upon it. I love that. It's the trading plan itself. So, and quite interesting. But I also want to ask you like how you approach the markets. But before I do that, I want to show everyone what you have done with your account in Funding Pips. So this one is $1,000 at the end of February, right? And in March, just a little bit less, right? $700. But on the next month, right? This is like first one February, March, and this is April. There's like a huge change in this. On the 18th of April, there's like $3,200 of profit share, and in May, it goes up to $10,000. So I want to ask you, what has changed? Like, what kind of mentality did it take you to reach this point from 1,000 to 10K?
Well, I'll start off with one thing, which is the account size. So the first two payouts were made on a 10K account.
Yeah.
And then from the first payouts, like from the 10K, I got the 100K again because I was like, okay, I think I'm ready, for bigger size. And I managed to get 3.2 out, but I had obviously a bit more in there. So I was like, no, I need to secure the, at least four figures. I don't want to go back to three. And then what happened with the 10K was I was like, I made four figures. I can do it again. And the other thing was I wanted to, like go into five-figure payout. That's why it's $10,022. And because in my mind, like, I had this thing where I would receive three, four-figure payouts from funding tips or other firms or personal account as well, because that's what I trade. And I haven't experienced the five figures. So I
Yeah.
wanted to get past the limitation and experience it and show myself I can do it again, you know, stuff like that.
Excellent. So you set some goals for yourself and then you work on them to make them real, right?
Yeah,
Oh,
exactly.
perfect. Perfect idea. I love that. I love that. And on the screen, I love the highest payout because I love seeing juicy payouts. It's such a motivating view for me. It's always amazing. But let's just continue with your approach to markets so that the audience can understand how you look at the price action and how you interpret and how you take your positions.
Yeah, that's perfect. Yeah. Um, yeah, so what I've done is I'll just zoom out. What I've done is I have marked out my trade entries with a small red circle. So basically, once we go back to like 16th April, around 12th of April, so the big ones, big red circles is the price action that usually makes me lose. As you can see, I'll go back down to 5 minutes. I think three is better. And I'll walk you through step by step. It looks a little bit messy, but will make sense once I get in there.
Definitely. Don't worry at all.
Um, yeah. Yeah, so I'll start off with here. Um, so basically, I think I had few losses here because obviously we had a huge sell-off. As you can see, big sell-off, and this is the first one here, the first sort of consolidation, bit more trendy price action. Then this was the second one, and I was looking for the price to come in my point of interest, which is the big zone here. As you can see, it still hasn't been tapped. But so basically, what you can see here is the red box is a New York session, blue one is Asia, green one is London. So I have marked out target highs, for example, as my target for my trade. So as you can see, this is the gap between the Asia and the London, and this is the Frankfurt basically rolling over from Asia to London open. So as you can see here, obviously it's a 5-minute chart, but as you can see, it VIX kind of just goes in below the Asia low, shows rejection, comes back in. So technically, what I usually do is I go down to like 1 minute, 3 minute time frames. I look for like a inverse fair value gap after there has been like a purge of liquidity or Asia high, Asia low. As you can see in this instance, it's Asia low. So as you can see, like the price comes in and comes out. Also, as the target, first target for sure is the opposite side of the Asia session, because the amount of times I see the price hit it or the extreme of Asia session and then reverses takes you out. So technically what I usually do is I analyze the news calendar. I check for like any news for the London session for euro and pound, just to kind of be able to forecast how many pips the London session is gonna move. Because like let's say for an instance, this one is 30 pips, could have been some fundamentals fueling it. So for example, the next one, you can see the trend line here. This is the liquidity. I would be looking to have grabbed before I consider any trades. So what happened here was during the New York, the price sells off. It doesn't respect this low, but what it does, it just wicks it, comes back in. This is the market close, so you can see there's equal lows here. So I marked out this zone. This is like 3 minute, 2 minute order block with a fair value gap. What's aligning with it? I'll just move it out of the way. Asia low here again. Nice highs. Asia high and some New York highs. What happens here again? Spring into my order block with the fair value gap, grabbing the liquidity, and comes out again. So technically I would enter somewhere around here. I believe this was a trade I took as well. Or maybe I missed it because it's 7 o'clock and I'm only waking up at 7. So as you can see, they all look the same. So once I walk you through, you'll see it's basically the exact same thing every time.
Exactly.
And for example, this one here. Reason why I was looking at this is I think this was the trade I took, but reason why this is a good trade for me, there is a blue line here. These are the highs I'm looking to be taken into the fair value gap here, which also aligns with this low here. So it's like support, resistance, whatever. It wasn't hit, but still it was in the fair value gap. The same thing again, takes the high, comes out, takes these highs here. So technically I would be looking to enter of this candle over here. And the target would be these equal lows, because that's support resistance and the price likes to go through it. And obviously not every support, not every resistance is gonna hold. And for me
Right.
personally, this is those target equal lows, they're way too high for me to belong in, because I also use fibs just to check where the price is at in each price leg, you know and for example, this one here, over here, it's not really like my type of entry, because you can see the price already did its thing during the Asia overnight. So here I could, well, I could enter here if the lows were taken, but they weren't, so it's no trade for me unless I manage to enter during the Frankfurt, which is still good because there's nice clean highs, which obviously were swept again. Let's have a look at the next one. This is, as you can see, I have marked out blue lines. So I think I took trade here as well, but the reason why this would have been considered a good trade for me is because uh, internal range high was taken inside the Asia session, so the extreme of Asia high was respected. When the price moved down, it made a high. Later on, it got wicked. Same here. Start consolidating, creating highs, wicks the highs, comes back down. So I would typically enter around here, around the London Open. And the reason why I would consider sometimes entry like this while the Asia high or low has been respected is because I look at what the pound dollar and the dollar index is doing. So I kind of combine them three together to see if it's a good idea to take the trade or not. And I'll just show you a couple more. This one could have been good as well because it's the same thing over and over. This low gets swept out, momentum down, but then the price reverses back in, retests the inverse fair value gap, whatever you want to call it, in lower time frames, and then a big momentum to the upside. As you can see, this was my target marked out, and it did exactly that. And obviously, with this momentum, you would see some euro news probably or pound news coming out. And my worst trades, I'm talking about good entries now, but I'll show you the worst trades. For example, price action like this. I have no entry around the Frankfurt session. Usually, what happens is if I take a silly trade, for example, somewhere like this, I try to long because obviously there is this impulse down, then the price comes back up. But reason why it's a bad trade is because the price is too premium. You see, it hasn't even come down halfway down or the 0.38 levels. So those are usually the trades that I rush and don't do enough analysis, to figure out where the price is at. It looks bullish, but at the same time, it has to come down to continue, which it did over the New York session. So these are the days, for example, I should avoid. If I don't see what I need to see, I don't trade, or just other thing is manage strict risk. For example, here as well, um, it doesn't work out with the Frankfurt Open. It does the same price, like inverse fair value gap, maybe on 10-15 minutes, comes back up, sort of rejects the high with the wick, but then takes the high and then sells off. And obviously there was news here, so I try to avoid trading news. And basically this day is no trade for me. Then we look over here. There is the blue supply marked out or fair value gap or order blocks. So I use the same color for all three. What happens here is because there is highs like this, I would not be looking to trade off the Frankfurt high here because the price hasn't come down into the blue box. But after it comes in here and kind of starts selling off, I would consider selling if there is reasonable targets. In this case, it would be these highs here, like
Yeah.
I mean higher lows, like a trend line as well. But as you can see, the price is doing same thing over and over and over again, like every day, every day. It has to take highs to move higher. I mean, it has to take highs to move lower, has to take lows to move higher, something like that.
Exactly.
Yeah,
Exactly.
and as you can see, even here, like all these red three circles, all doing the same thing. So I think it's pretty clear how I trade. When it's a good trade, it's the same setup basically happening over and over. It's just avoiding the days when the price is not clear. Um, like for example, this one here, Asia, then the London, and then the New York with the news. These are the days usually I would lose or give away profits, so it's something I'm considering to completely cut out. If the price is not giving me what I need, I don't trade. And let's have a look a bit more at recent. Yeah, so this big red circle as well is the days I usually just mess up. So like, you know,
Because the
trying
price
to
action
avoid
is
that.
not quite clear. It's going on one direction, but with a higher spike. It's not like a proper trend. It's just going up, but like until where? So I
Yeah,
definitely understand what you mean because I also struggle with those kinds of price action.
yeah.
You never know.
I'll just show you quickly on the daily time frame about the euro price action because on Twitter, that's another story. But on Twitter, lots of people, saying high, higher, lower, strong, weak. But what do I see? Let's say from the January 2023, a consolidation. That's
Yeah.
all I see. So you sell high, buy low, and same is for the well. That's euro. So the dollar is pretty much the same. You see. So all I see is consolidation. You know. So you know, and it's kind of interesting because I am watching. Where it's gonna go, but sometimes can be hard to tell.
Yeah, definitely, I understand. And I also understand from the strategy that you explained, you kind of trade with ICT. I imagine like you studied a lot because I can see how you are selective about your liquidity levels in terms of those swing highs, like some sessions swing highs, swing lows, or like equal highs, equal lows. You
Yeah.
actually benefit a lot from fair value gaps too. And I think that's nice because you're not just trading some kind of memorized setup, but not that there's anything wrong with it. I love
Mhm.
mechanical setups, but you actually interpret the price. It always feels better though, like to do that. And I
I can.
definitely I can relate to that. I can relate to that.
Yeah. If you want, I can walk you through the recent trades as well, and the price
Yeah,
action here is
sure.
pretty nice. So let's say this big circle here, that was on a personal account now. So what happened here was there was not a very big spike down, but there was a spike down, and I'll just take the dot off. So you see this line here, there is a New York low, Asia low, 12-hour fair value gap, so very powerful as you can see. So what
Yeah.
happened here was there was a Euro news. They came out, and my objective was to wick the lows. After the price came back up around this level here, if you can see it, what I did was I entered couple positions, and my target was the New York high. That's it for this trade. And as you can see, there was more news coming out. And as you know, for the euro, they are not as aggressive. So the price moves nicely, maybe 5, 10 pips, 15 at the most, and played out nicely. Later on, during the New York just sold off. But
Perfect. I love that. I love that.
yeah, and then this one here, this was a little bit messy. Um, what happened was I was looking at different levels on the left, but the price kept going through them. So I found this high here. After this high's been swept, the price comes in here. It's like an order block with a fair value gap, all this stuff. What happened here was because the pips, in terms of the pips, it was so small. I went down to the 1 minute time frame, and I'll show you. So I entered the position with the stop loss above the order block, 5 pips, and after I seen the price move down a little bit, I reduced the stop loss like that and enter another position to increase the size, but the risk remains the same, if you get me.
Yeah.
And
Yeah,
that's
yeah,
what I do a
definitely.
lot.
100%.
And what happened was with this trade, I did hold it all the way down till here, so it's 1 to 12, but the risk on the trade was small. It wasn't like anything like
It's
1%. It was
always
like,
like that. The ones we
yeah.
risk the less goes the highest RR. So it's like Murphy's Law. I'm not
And
surprised.
then, yeah. And this is this morning's trade, for example, that I did take and I won. So I seen multiple smart money traps, I call them. So they're marked out in red boxes. As you can see, like there is chalk to upside, chalk to downside, comes down with a big momentum and still takes the high. So I consider them traps. As you can see here, after I took my trade, there was the same thing, chalk to the upside, chalk to the downside, still took the high and then sold off. So that's the trade I took this morning. Same principle, extreme of the Asia session, as you can see, there is a fair value gap as well, and it's 1 minute. That's what's important. It's all 1 minute. and it can just show you how powerful it is. So
Yeah.
after the highs was taken, I seen the price come in, and I entered one position before the price went higher. I had the stop loss around this level here. After the price sold off, I reduced the stop loss and scaled in, and that's one trade. Another one is on the pound dollar. So as you can see, there was these highs taken again. It was obviously a bit more messy. So my target for the pound trade was the 30-minute fair value gap, which was hit at almost 50%. But I didn't hold it all the way because if you look back at the euro took the low here, and the pound, yeah, just after I exited, it did take the low as well. But what happens is when there's no news, no orange or red folder news on euro, it's very choppy, very
It is.
kind of corrective. But at the same time, I think my best time frame is 1 minute, as long as I know where the price is at in the 4 hour, 6 hour, 8 hour, and it's just combining the higher time frame with the lower. And if you know what the direction is, not for the next week, next month, next year, but for the next day, for next session, and next week, maybe at the most, you're gonna be okay. And what
I love
people
that.
do is, yeah, people overcomplicate with one thing. They trying to figure out, okay, where the price is gonna go for the next week, next month. All I'm looking for is let's say the euro trade, it was 5.8 pips, 2 pip risk. It depends what firm, what broker you trade with, but it's all possible. Some people don't believe in 2 pip stop loss, but what I want to cover is, before someone starts commenting while watching the video, is that this price action and the amount of pips, it just happened. But what happens sometimes is I see the same price action, but instead of 2 pip stop loss, I could be getting 5 to 10 or even 15, and I still take the trade. And then the profit targets, for example, this was 1 to 3, two pip risk to gain 6. So let's say if my stop loss increases to 5 or 10, the targets multiply as well. So it really depends on the market conditions,
Exactly.
and just trying to keep it simple. And for me, all this is simple because it makes sense. For some people it could be overcomplicated. It's maybe because they trade differently, or they use different analysis, let's say.
Definitely
So
get it. It makes a lot of sense to me too because
yeah.
you already have a plan. You go from higher time frames to exactly decide where are you going to take a trade, and then go lower time frames to determine if the price like reaches this area. I might get triggered to take a position, and then look for specific liquidity graphs before you actually take a trade. And it already makes a lot of sense to me because that's if you want to trade by interpreting the price and not just mechanical, this is how you should actually do it, so that you can understand where the price came from and where is it going next. And even the next session is enough. Like you don't need to know where the price is going to go the next day, but if you can actually understand like the next session's direction, you can even like book a few pips, and sometimes it's more than enough. Like there's a thing called
Yeah.
scalping for a reason. So I
Oh yeah.
definitely get your point, and I'm a fan. I'm a fan of ICT strategies. Only if the trader is actually interpreting the price, not
Yeah.
just trading some kind of memorized rule book, but really, really interpreting, because that's what it's important. We have to understand what we're doing and to do this thing for a very long time and consistently. So I
Oh yeah.
definitely get it. Before we continue, I want to ask you a last question,
Yeah.
because I love this question, because sometimes when traders answer it, it also gives me a lot of ideas. And I'm curious what you're going to say. It's a simple question though. Like don't get quite excited. Um, so I see that you are a successful trader. For a few months, you've been requesting payouts, and you've been scaling up your payouts and your mentality and your trading game. Obviously, it seems like you also care about like your behaviors during the trade,
Yeah.
since you decided not to take a trade during New York, but during London session you are more comfortable with it. So it tells me that you have some kind of mental game too. So what would you advise the other traders out there who are trying to be consistent, trying to be successful, trying to get a payout, but still can't?
Well, I'll start off with something I did recently. I deleted all my socials like Facebook, Instagram, and Twitter for one reason: too much noise, too much distraction, and too many things you want. Because for lifestyle, it's the Instagram. For other stuff, like, it's the Facebook. Too much waste of time. And then Twitter, it's too many people distracting, because I would wake up in the morning, like check up on the people I actually like, and I see some random people I don't follow, I have no interest to see. They posting their opinions, their like objectives, ideas for this and that, and I'm like, no, no, it's too much. And I don't monetize Twitter or Instagram, so I can afford to delete it. For people who make money one way or another, they might need it and they have to put up with the stuff. But for me,
Makes
I was
sense.
like,
I
and
never
now
thought
like I'm just so peaceful.
I mean, I never thought about that. Makes sense
Yeah,
though. Like maybe why people do not go away from Twitter. Maybe a social detox in terms of like social media detox is better, because like if you're getting up from the bed and the first thing you do is just to go to Twitter or Instagram or just check what everyone else is doing, you're not really focusing on what you're doing. You just wake
exactly.
up, like take a breath, like take a moment to realize where you are, take a moment to realize that you're alive, it's a new day, like take a moment to like hear outside, etc. Makes a lot of sense, it's deep, I love it.
And there is a few other things I would like to, just to mention is there is couple books I'll start off with. One is the Forex Mindset. The Forex Mindset, whoever will read it, they will realize the person went through and spoke exactly about the same thing we all go through, about looking to make a little bit of money, because the guy is going with his family on holiday or shopping, and he ends up blowing 350K in like literally a day or two. And the book, The Forex Mindset, it resonated with me so much, and I've never heard anyone talk about it, so I'm the first one. But
Perfect.
I highly recommend reading it, just to see like how much of that book will resonate with your experience so far in trading, you know. And the other one would be, it's Simon Sinek. Start with why. So basically, reason why I do my technicals the way I do is because I ask why. Why is Asia session here? Why I want to sell? Why I want to buy? Why is this happening? Why is that happening? What will happen? When these news come out? Is it a gamble, or should I wait, or should I do what? The other one is um, the Wyckoff. Basically, it sounds like ICT, but I showed it like ICT, but majority of it in my head is Wyckoff. So I haven't heard anyone talk about it for a few years now. But Wyckoff, basically, it teaches you very powerful stuff that you can see on the charts, which is like, for example, there is consolidation. No, it's not. It's accumulation, distribution, reaccumulation, redistribution, and there's manipulations. And obviously, ICT teaches things. If you're watching me, don't be mad, but
No,
I
no,
prefer
no.
Wyckoff. Oh no, I mean ICT. If
The
ICT,
ICT
forgive
traders.
me.
I think people who come here and watch these interviews don't just come here to hate on others. I think they
Yeah,
realize how important other opinions are, other types of technicalities. I call them schools, like like school of ICT, school of SMC, school of Wyckoff, except like for example. It really doesn't matter how you make
exactly.
money, and if you think a method is important to you, it means that you're making money with it. That's why you think it's important to you, and that's why you came here to share your experience with others, because you have been successful. So I totally get it, and I don't think that there are anyone who's gonna hate on like this
Oh
right
no.
now.
The most important thing now, since I covered the books and stuff, the most important one is if you can only afford one or two accounts, don't even think about risking 4%, which is, I went through like a lot of stuff in those 4 or 5 years, so I know and I've been told, but I'm just saying, if you can afford multiple accounts, and you've been in the game for a long time and you have made payouts, okay, it's a different story. But if you're building yourself up, don't throw in 500 euro of your last money and consider risking 3-4% on a trade. 1 to 2 is okay, it's good. You can get back, if you take a loss. If you win good. But if you're risking 4%, that's 2.5 days of trading that risk. And I did that by doing one thing, but moving stop loss. People don't talk about it because they may be embarrassed, maybe they care too much what others gonna say. We all move stop losses, based on our emotions, how we feel, what we see. But that's the reason why I made a strict plan. London only, 1 to 2 risk, no moving stop losses. Maybe enter with a big stop loss. This is what we should do all technically. And enter with a bigger stop loss if you believe in the move. Then, once the price starts going in your favor, scale in and reduce the original stop loss so you still maintain the same risk. And this is something that I am, switching over to, putting out stop loss movement because it's something people don't talk about, and they should, because the more people talk about it, the more people will start thinking about solutions to the problems, right? I
Exactly.
think that's how it is.
Exactly. Thank you. I think it's very helpful in terms of so many things, because it gives out some other perspective to other
Yeah.
traders, like some things that no other trader has spoken of before. It's nice. I love hearing about different opinions. And thank you for joining this interview today, Martin, and
Thanks for
sharing
having
your
me.
experience with us. And giving us a chance to get to know you and how you approach the markets. It helped a lot. And I'm sure our audience has also learned something from it, because it was quite in detail and it was quite explanatory. And I also learned a lot about your point of view in terms of this mentality and how you approach the markets. So thank you for joining to this
Thanks very
interview.
much.
You
Thank you
are
so much.
very
It was my
welcome.
pleasure.
And anyone who's watching, I'll see you guys on the next one.
See you now. Have a nice day.